Hello, you're welcome to Fininvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 2 decades in the Nigerian stock market. In the course of this presentation, I would like to talk about the fundamental analysis of Oando Plc. Oando is a company in the petroleum sector, in the same sector with companies like Total Energy, Eternal Oil, Aradel, Corn Oil. These companies are within that same sector. So we want to actually analyze the company's full year result, though not audited. The audited result is not yet available, but all the same, we are going to still make do with what is available now because it will still effectively serve our purpose. And our purpose here is to determine the company's suitability for a typical investment, stock investment portfolio or not. So we start with the company's revenue. The company recorded a revenue of 3.213 trillion, 3.213 trillion in the full year 2025, as against 4.087 trillion in the full year 2024, representing a percentage decline in revenue of about 21.39%. Then there was a drop of about 82.80% in the company's gross profit, 82.20% drop in gross profit from 155.888 billion in the full year 2024 as against 27.750 billion in the full year 2025. So for the company's operating profit, the company generated an operating profit of 569.681 billion, 569.68 billion in the full year 2024, as against 50.234 billion in the full year 2025, representing a 91.18% decline or decrease in operating profit. Then for Oando's profit before tax, there was a decline of 96.04%, from 383.638 billion to 15.202 billion, giving us a decline of 96.04%. It's a huge, decline. So we want to consider the company's profit after tax. And the company generated a profit after tax of 220.120 billion in the year 2024, 220.120 billion as against 241.312 billion. There's something interesting happening here, between the profit before tax and the profit after tax. You could observe that the profit before tax is lower than the profit after tax. The reverse ought to be the case. The profit after tax should be more than the profit before tax. What happened is that the company got a kind of tax rebate here to the tune of about 220 something billion. All right. Ideally, we'll have gotten about 220 something billion here. All right, which is more than what is obtainable here. So that rebate is not reflected here in the financial statement. So you have 15.20, 202 billion instead of something higher. That's what actually transpired here. I hope is understandable. So for the total comprehensive income, there was a drop. Before then, there's an increase of about 9.3 9.63% for the profit after tax value. Then for the total comprehensive income, there was an increase of about 315.01%, 315.01%, because the company recorded a loss. Total comprehensive income, there was a loss here of 83.041 billion, as against a profit here, a gain here of 178.555 billion naira. So this is the increase here, about 315%. Now we come to the company's earnings per share. The earnings per share here is quite robust, in the sense that the company made 30 naira, for the year 2025, as against 18 naira in the year 2024. There was an increase of about 66.67%. All right, 66.67% in the per share, the earnings per share. Then for the share price, the share price increased from 9 naira 95 kobo to 49 naira 70 kobo, 9 naira 95 kobo to 49 naira 70 kobo. That's an increase of about 399.5%, or approximately 400% increase. So Adimi invested 9.95 million naira. That will give you 49.7 million naira. From 9.95 million naira will then generate 49.70 million naira. So that is it with this particular segment of the analysis. Actually, we want to look at the other section, which deals with the company's cash flow statement, as well as the balance sheet. So let's look at it. The company here has a share outstanding, number of shares outstanding of 12.43 billion, 12.43 billion, and the market capitalization is 617.8 billion naira, 617.8 billion naira. So how do you obtain a market capitalization? You simply multiply the share price, which is 49 naira 70 kobo, by the shares outstanding, which is 12 naira 43, which is 12.43 billion. That will give you this value, this figure, approximately 618 billion naira. Then for the equity here is giving us a real cause for concern. All right, the company has a negative equity to the tune of about half a trillion naira. It's owing debt. It's assets minus liability do not really produce the desired outcome. So you're having a negative equity. This company is like, if care is not taken, if nothing is not done about it, this the sign of a very, very weak balance sheet. The balance sheet is weak because there's no equity, negative equity, there's no shareholder value. Shareholder value is missing. All right, so the company will be able to find it very difficult to obtain loan, because this is what bankers consider when giving out loan. The company's balance sheet is very, very weak. It's weak. It's showing sign of kind of distress, distress sign. Then for the equity per share is nil, because already the equity is minus. It's a negative sign. So there's no actual equity per share. The company has a cash balance of 363.8 billion. 363.8 billion. It has a cash balance, but unfortunately, this particular area is a red flag. It's a glaring red flag as per the company's balance sheet strength. Then for the PE ratio here, this is one of the cheapest in the market. In fact, the cheapest I've ever reviewed so far. All right. In other words, the price all over the earning will give you 1.67. This is the price, okay? 49 naira 70 kobo. divided by the earning of 30 naira. Okay, that will give you 1.67. Now, no doubt, this company is very cheap. There's no doubt about that. But did you just pursue, relative cheapness? There's a reason why companies are cheap, and there's a reason why companies are expensive. You need to ask yourself, why is a company cheap? In this case, this is the reason why the company is cheap. All right, this is a sign of distress. So investors are like dumping the shares. It's not attractive to investors, to market participants. That is why these companies are as cheap as 1 naira, as cheap as 1.67 earning per share. It means that for every 1 naira generated by this company as earnings, you are buying that 1 naira earnings for 1 naira 67 kobo. So it's very, very cheap. The cheapest I've ever come across in the markets I've reviewed so far. So you can also look at these parameters here. You're coming across a decline, percentage decline. All the key parameters, they've been declined all through. All right. This other one just managed to record a positive, increment because of the little financial engineering that was conducted here. That's why you obtain this marginal increase here. Okay. So is this company a candidate for for investment or for your portfolio? Personally, I would say no. But people are still buying the stocks today for reasons I cannot really understand. It's best known to them. Usually, all these things are for academic purpose, for educational purpose. The opinion here, is mine. It's not binding on anybody. But left to me alone, I wouldn't want to, invest in this company. Although they bought a particular, oil company some times back. Let's see. By the time the proceeds of that acquisition start trickling into the financial statement, there could be improvement in all these parameters. Okay, so at that juncture, you can go ahead and buy the company if you so wish. But for now, I will advise you stay away for the meantime until when there's an improvement in all this. When you start having positive, increments, then that company is due for, is due to be considered for investments. Okay, so I offer portfolio management service where I recommend stocks for my client. And I help them manage their portfolio for them with the sole aim of generating, a better return on investment compared to them managing it themselves. So if you're interested in that service, I could hold your hands and assist you and help you, guide you to be able to generate better returns in your portfolio. Then of course you contact me through this number. You can WhatsApp me and then we can talk and see how I can use my little experience, to help you avoid the mistakes I made when I was investing newly about 20 years ago. Please like this video and subscribe to this channel. If not done that, share it as well so you can reach out to at least 1 million Nigerians home and abroad with the message of investing in the Nigerian Stock Exchange, which of course has been, a veritable source of wealth creation, in the past years. So I'm depending on you, in these regards.